Hello everyone and welcome back to our quarter earnings strategy report. This time we are releasing two new strategy calls, Kotak Bank and Dish TV. First and foremost, we'll take a fundamental check on Kotak Bank or expectations from the results. If you look at the performance for FY 2012, Kotak Bank has delivered very strong performance for the first 3 quarters of the year, where the top line has grew by around 40% and the bottom line grew by around 20%. But if you look at the fourth quarter performance for FY 2012, although the top line grew by around 40%, but the net profit grew only by a mere 6%. The reason behind it was the higher operating expenses as well as the higher interest expenses which the bank had, because of which there was a subdued performance. For our expectations for the first quarter of FY 2013 is that the net interest income is likely to grow by around 18% and the PAT is likely to grow by around 17% to 489 crores year on year. In terms of the asset quality, for FY 2012, the NPAs was around 0.51%, which has been deteriorating. In the September quarter, it was 0.46, which increased to 0.51 for the March quarter 2012. For the first quarter FY 2013, we are also expecting the pressure to remain in terms of the asset quality and the provisions. Out of the 7 occasions, the bank has delivered performances above estimate of 4 times out of the last 7 occasions. We'll have a technical check to arrive at a strategy call. Thank you.
Hi friends, now let's have a look at technicals of the stocks. Firstly, Kotak Bank. Kotak Bank is almost near its 52-week high, but the stock has been trading to a very strong support level, which is at 570 odd. So what one can look to do is one can buy Kotak Bank in CMP of 590 and 577 and place the stop loss at somewhere around 565 to 570 range, and look for a target of 603 to 613 on the higher side.
The next stock is Dish TV. Let's have a look at our expectations. In terms of the subscriber base, we are expecting an improvement for subscriber base for quarter 1 FY 2013. We are expecting the net additions, gross net additions of around 0.6 million and a net subscriber addition of around 0.3 million for the first quarter FY 2013. In terms of the run rate, we are expecting to be below the overall estimate of FY 2013. And what we are expecting in terms of the revenue is a growth of around 14%. Growth in the revenues to around 528 crores, whereas the PAT would be expecting a loss, where we are expecting a degrowth of around 36%. The loss will be somewhere around 25 crores because of the higher interest cost and also the overall digitization which has not yet picked up, and also the set-top boxes which are US denominated, and because of the rupee depreciation we would see that effect coming into place. However, going ahead, digitization does remain the theme for the company, and there are expectations that the deadline of 31st October would not get postponed for the metro cities. So overall, we'll have a technical check for this stock to arrive at strategy trade. Thank you.
Dish TV is also trading at an important crucial level of 65, which was earlier a resistance level. So 65 was the last time breakout level. This time around we expect Dish TV to take support at the same level of 65, which was earlier breakout. So what one can look to do is buy Dish TV between 68.7 and 67 rupees, place a stop loss at 64.4 and look for a target of 70.6 and 72.2. That's all from our side. Thanks.